Hello, world. My name is Jeremy Porter with CANI Property Management, and I'm sitting with the lovely and talented
Angie Ruff.
with CANI Property Management as well. We manage long-term residential, short-term properties. So if you're looking for the right property manager, someone honest and ethical, please feel free to reach out. But we're here to give you some tips and tricks about rental properties today. And Angie has the question for you. Angie, go ahead.
So right now we've been talking about investment properties and finding the right investment property. As a property manager, clearly you've had decades of experience, not to make you sound old. But with that being said, how do you know a property is going to cash flow? Because it's all about the money.
Oh yeah. Well, part of the problem is today's market, right? Today's interest rate. It's hard to put 20% down, right? The traditional equation, if you will, 20% down and make it cash flow in the Central Florida region area.
Right.
So at this point, you do need to put more than 20% down. I would say 35, 40%, have a good interest rate, that sort of thing. I've been, listening to a lot of investment people, books, and this and that over the years. Some people say you should never finance rental property because stuff happens, right? There's a major repair, there's tenants getting evicted, and this and that and the other thing. You should buy the property with cash. Although I don't always think that that's possible, but I think you should have enough positive cash flow, maybe even 50% down, to where you can have a stash in case something goes wrong. Because even if you do hire a professional property manager to manage your property, there's always the unknown, right? I sat down with a experienced multifamily investor. They had done it for 20 years, two husband and wife team. They had managed up to 350 multifamily properties doors at one point, and they signed up for our Worry Free program, which covers up to $5,000 on $5,000 of eviction fees, up to 6 months of unpaid rent, up to $35,000 of malicious damage, and up to $15,000 of theft. And they signed up for that program, and I said, "Why?" And they said, "Because you just never know." And I'm like, "You're right. You just never know." As good as we do on the screening and checking the people and everything like that, you just never know. What if they lose their job? What if they get a divorce? You just never know what's going to happen. So, in regards to cash flow, now you want to work with a realtor who, or educate yourself enough to where you can check the rental rates, right? Reach out to us if you're in the Central Florida region. We'll, just send us the address, the bedrooms, bathrooms, that sort of thing. Give us the basic information. We can run a rental analysis on you, unbiased. We're not helping you with the sale. Our commission doesn't depend on it, because the realtor you're working with, if they're helping you buy, they might be a little influenced to go on the higher side if their commission's on the line. But with us, our commission's not on the line, so we're not going to inflate the value at all in regards to that. So
I have a different perspective.
yes,
Completely different perspective.
yes,
So the
please.
question is, how do you know if a property is going to cash flow?
Yes.
Right? So
Uh-huh.
I would look at it more from a financial standpoint.
Yeah.
Doesn't matter about the property, doesn't matter about the interest rate. At the end, math is going to math.
Math is
Right?
gonna math.
It's either going to work in your favor or
Yeah.
it's not going to work in your
But,
favor.
but what if there's longer vacancy? What if
No,
there's
I
an
agree.
eviction? What if
There's things like that. But if it's truly the question is, how do you know a property is going to cash flow?
Mhm.
You've already done the due diligence. Is this a good property?
Yeah.
Such from our prior video, what are the red flags,
Red
right? That
flags.
kind of thing.
Yeah.
But if you look at it from a different standpoint, how much equity do I have to have in this deal? If you look at it as a deal, not a property,
Mhm.
to be able to make me money. So, and then can I go into it in a situation like you said, you should pay cash or you should not spend your own money, you shouldn't finance it. Is this a deal I can go in with other people that maybe I'm part of an investment network or something like that, to be able to go in at a level where the cash works and I don't have to go a traditional route of putting anything down through a traditional bank. Maybe I'm doing that type of thing. So
Right.
to me, I look at it as, okay, what is my potential income in? Yes, in my opinion, I'd be going to who are the property managers in the area for that particular property, and I want to get multiple CMAs. I want to get
Right.
multiple comparative
Yep.
analysis because what you may believe to be true, someone else may not be believed to be true. So as someone else coming in, I'd be like, I want the data. I want to see that, but not get stuck in analysis paralysis.
Right.
So go there. What are my potential expenses? Have an idea of like, could you say a homeowner or investment owners should plan for a minimum of at least 10% in rental income as expenses, or is it 20%, or is it 30%?
Mm.
I think it's going to depend on the age of the home. I
Right.
think it's going to depend on how close it is to other factors, such as how close is it to water, how close is it to maybe a manufacturing facility that's got rocks and dirt that's going to come by and potentially throw a rock through the window.
Mm.
Those other kind of factors. So to me, it's okay. What's my potential revenue from the data that I've collected? What's my potential expenses high end, because if you go low
Yeah.
end, you're going to screw yourself up.
Oh yeah, for sure.
So low end on rental income, high end on
Yeah.
expenses, and then what's it going to take for me to be able to make the money? Do I break even from the start, or is this a long game? Is this something where I can say, oh, you know what, if I can limp this along in 6 months, then I'm good. But again, back to what you said with vacancy, if it's going to cost me $50,000 to even get it rent ready, now it's a whole different level. So
Oh yeah.
now it's not just the ongoing maintenance expenses, it's what's it going to take to make that rent that we want it to rent at.
Mm.
And then from there, what's the likelihood of vacancy? Is it something can I afford to price it right?
Mm.
And so to me, that's why if it's going to cash flow, it's got to work on the spreadsheet for me before I even say, yeah, let's make that deal happen.
Yeah.
Yeah,
That's
no?
great advice. No, no, no. That's perfect. That's perfect.
I mean, again, that's just a different take of someone that's not been in real estate. To
Right.
me, I look at it as a business because at the end of the day,
It is. It should
this
be.
is a business. You should
Right.
be treating your rentals and your investment property like a business, so you don't have to work so hard and whatever you're doing as your day job.
Right. Absolutely.
And I think that answers the question from both of our perspectives this time.
Absolutely.
All
Yeah.
right, that's
Loved
it.
it.
All right, until next time.
Bye now.